Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, June 2nd, 2011. This morning I'm asking who's working, and yesterday we're looking right here at a chart of Euro USD, and you can see how yesterday we had the sell-off happen. It started a little bit earlier, but once we got the U.S. ADP employment change figures that came out yesterday, which came in just a horrible miss. The market sell-off really accelerated, and you can see that prices really started coming down. So yesterday, we had a big sell-off in stocks. It was the biggest one-day loss for the S&P and the Dow, and I think 6 or 7 months. And basically what had happened is that the market's totally shifting its opinion here about how economic recovery is going in the U.S. Because one of the things that we obviously need is jobs growth. All right, so the 3-day job meeting starts off with ADP unemployment change, which just missed very badly. They were expecting I don't even know how many, 180 something thousand jobs, I believe, and they got 38,000. Okay, the expectation was 175,000. All right, now this morning we're going to get the U.S. initial jobless claims. Those are going to come out, and they're expecting another around 417,000. Okay. And then tomorrow we have the non-farm payrolls, which now everybody is redoing their forecast for non-farm payrolls, all right, based on what we saw of the ADP employment change figure yesterday. So it started the week, they were expecting non-farm payrolls to add 175,000 jobs, and I'm hearing people are pulling back that expectation to around 100,000, possibly even less. So you can see that jobs growth is a big problem. And, just looking at the euro here, the euro is hanging in there fairly well up until the point in time when Moody's decided that they wanted to downgrade Greece's debt to CA1, which means it's in the C category. B is still what could be considered investment grade, although speculative where they were. But being in the CA1 category, it should be noted that just about 50% of those rated CA1 end up defaulting on whatever the debt is that they have. And what this is going to do is this is going to put more pressure on investors and on the EU to be ordered to figure this process out and what they're going to do about these bonds, because a lot of investors now can't even invest in these bonds because of the new rating. So it's going to be interesting to see what happens. But Chancellor Merkel was out. She was speaking and saying that, they don't have a euro problem. The problem's not with the euro. It's actually with just individual countries' ability to manage their debt, and that Germany's still committed to the euro and finding solutions. So that's all well and good. We're going to see what happens there. But as you're going to see, most of these charts are looking the same. Okay, yesterday we had the dollar was very weak, and then all of a sudden it started to strengthen. You can just see here on the weekly version of the 30-minute chart. All right, so now we've got the euro back up. If we go back to the let's go back to the 2-hour chart. Okay, you can see that the euro is going to be just higher than it's been in the past little while, and we're approaching 145 here again. Okay, so we've gotten past yesterday's hiccup, and we're now moving back forward. All right, now we've got the Aussie. Just want to show you the Aussie overnight. Australian trade balance figures came in less than expected. However, the retail sales were better than expected, posting 1.1% gain versus a 0.4% gain. That's a good sign for Australia. We know about the problems that they had with GDP thanks to the flooding. So it makes sense that people are buying more stuff because, if your stuff was ruined in the flood, you got to go out and buy more. And it also makes sense as to why the trade balance figures were lower. So this one-time event, we'll have to see how they do going forward, but things look okay there. I just want to show you the New Zealand dollar. New Zealand dollar, took a little spill here. It's actually coming back. Okay, there's a problem there with their powdered milk. Now, you're going to think I'm making this up, but powdered milk prices have actually gone down significantly, and that's a major export for New Zealand. So, they're worried about their income coming in from abroad with these lower powdered milk prices. So you see the kiwi there a little bit lower. Just going to show you the pound real quick. All right, the pound is also bouncing back after the PMI figures which came out yesterday, which incidentally those were at a two-year low. So they got PMI construction figures this morning. Those were higher, came in a reading of 54 versus 53.5. All right, so it looks like the pound is bouncing back now. They had Bank of England Minister Fisher came out and he said that he would be committed to more quantitative easing should the situation warrant it. So that's going to be an interesting story there to see what happens. The recent data for the UK has been fairly weak, but they still have very high inflation. And these guys, talking about further quantitative easing, I think they're going down the same path as the US and basically painting themselves into a corner. So not totally enamored with that one. Lastly, I just want to look at dollar yen here real quick. Okay, you can see we had a little bit of dollar strength happening, okay, and then we had the sell-off here yesterday, and then they got the bounce, and now we're coming back in. It looks like dollar's weakening against the yen again. All right, now in Japan they had the no confidence vote for Minister Khan, and he actually passed it, meaning he doesn't have to step down right away, but he also said that once he's done dealing with the crisis, he will step aside. So what that did is that took some of the political pressure away from the situation, and it mitigated what was going on as far as uncertainty in the market, which could have been put more pressure on the yen and global markets. But overnight, Asian stocks were down significantly. They followed U.S. stocks from yesterday lower. We're bouncing here in the U.S. though this morning. Okay, we've got European stocks are down, but we've got gold higher. Gold's been a proxy for risk. Okay, you can see that the Swiss franc has been higher and just continues to move in that direction. Okay, firmly under 85 cents versus USD. It's interesting. We've got gold and the Swiss franc basically is acting as the two most desirable safe havens right now. We've got dollar weakness despite declining risk assets, things like the S&P 500 and oil. All right, and then we also have a little bit of Japanese yen strength versus dollar, but you can see yen is weaker against the rest. So that's kind of what we're looking at today. There's not a ton of news here for the rest of the week from around the globe, except for what's coming out of the U.S. And this morning we're going to get the initial jobless claims. We're also going to get factory orders, and then of course tomorrow morning 8:30 a.m. is the non-farm payrolls report, which should be the granddaddy of them all. So I'm going to have to wait and see how the markets close out today to really render an opinion on how I think non-farms are going to go. But check back tomorrow. I'm going to try and see if we can watch this thing live. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.